Dodge O'Donnell joins us live from New York. He's Chairman and Chief Investment Officer at Landor Fuest Capital. Dodge, morning. Thank you for joining us. Dodge, globally, do you think markets are in a start and a stop mode? On good days, we talk about earnings, we talk about economic recovery. On bad days, we talk about China and the sticky situation in Europe.
Yes, indeed. Good morning. It's a pleasure. Unfortunately, the markets are going through a lot of drama in reaction to what is happening politically and economically. We've had quite a run, so the concern is that there's not enough momentum to the upside. We're talking recently about some of the disappointing earnings news that have come out from the likes of Intel and IBM. It's not that the news was all that bad. It's just there are enough shortfalls and negative comments to send stocks lower. So there is some concern. There's with the first quarter that we just came through having very good results, there's very little of a compelling need to be buying into the market right at this point.
Dodge, hi, morning. And yet again, we'll have cues from Europe to fall back upon. You've got the Spanish as well as the French auction line up today. You've also got Italy's approval of the EU stability program. Does it seem like the market could gather some semblance in the near term?
It could, but you mentioned Spain, for example. One day Spain reported that the proportion of bad loans at its banks rose to an 18-year high. And that was yesterday, and that really offset the successful auction of the 2-year bonds. So the market's really still reacting to short-term news. That's creating the drama, and there's not enough of a compelling need to take a longer-term stand at this point. We're not seeing a great deal of selling. In fact, the selling pressure that came in yesterday in the U.S. markets was just a little bit more than the buying power that occurred the day before. So there isn't really much conviction either way.
So, Dodge, to your mind, what will dominate Q2 trading headlines, risk on or risk off?
We suspect that there's not one compelling event that's going to control the markets at this point. For a while, we thought the price of the oil and the price of oil was going to affect the longer-term future. We're now beginning to transition from shorter-term concerns. We're getting into our political season. The political season is beginning to look very important because there's no clear winner at this point between the two parties and the November election coming up. So, but regardless of who wins, what's going to control the market is the perception of, for example, taxes. If tax rates are going to go up, it's going to affect our market. And as we get closer to the end of the year and the fact that the Bush tax cuts are set to expire, this is a real concern for the market at this point.